Your broker has a hidden tax setting that decides how much you pay the IRS, and most investors never change it. Most brokerage accounts use a default cost basis methods called first in, first out. That means when you sell shares, the broker automatically sells your oldest shares first. Those shares often have the biggest gains, which can increase the taxes you owe. First in, first out is simple, but it is not always the most tax efficient method. Another option is highest in, first out. Highest in, first out sells the shares you paid the most for first, which can reduce your taxable gains. However, highest in, first out often sells your newest shares, which are usually short term holdings. Short term gains are taxed at ordinary income taxes, which can be as high as 37% plus the 3.8% net investment income tax. In many cases, selling long-term shares instead can result in a lower overall tax bill. Many brokers now offer a better option called tax-efficient lot selection or min tax. This method looks at your available tax lots and typically prioritizes realizing losses first, then selling long-term shares, and finally selling short-term shares last. Instead of relying on a simple rule like first in, first out or highest in, first out, this approach attempts to minimize your taxes across each sale. Here is a simple example. Imagine you bought 10 shares 1 year ago at $100 per share, and then 10 shares 3 months ago at $150 per share. The older shares qualify for long term tax rates, while the newer shares are short term. A basic highest in, first out approach might sell the $150 shares first because they have the highest cost basis, which could increase short term taxable gains. A tax efficient method may instead prioritize long term shares or use losses elsewhere in the portfolio to reduce the total taxes owed. There is one important rule to remember called the wash sale rule. If you sell a stock for a loss, you cannot buy the same stock back within 30 days before or after the sale. If you do, the IRS disallows the loss and your tax savings disappear. Tax efficient strategies only work if you follow this rule. The key takeaway is simple. Check your broker's cost basis method or tax lot settings. Do not rely blindly on first in, first out, and do not assume highest in, first out is always better. Choosing the right tax lot method and keeping accurate records can reduce unnecessary taxes and help you keep more of your returns.